Today's episode of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk here on this Wednesday, June 22nd. Great to have you with us once again. Thanks for making us part of your day. I am your host, Jesse Allen. Find us online, markettalkag.com, our home on the web. You can find all of our streaming sources there, our YouTube channel to watch the daily video version of the show. Also find all of our radio affiliates and much more there. It is all online. You can find it very easily, markettalkag.com. Well, a lot to look at here in the market trade on this Wednesday. We saw the markets kind of another down day, a little bit of liquidation at the end in the wheat market and in corn as well. Soy complex under pressure here today. Livestock down day as well. Joining us to discuss, our good friend Mike Zuzolo with Global Commodity Analytics joins us on this Wednesday. And Mike, good afternoon to you, sir. And no shortage of news items to take a look at here in this trade today, but it ended up being kind of another down day on this Wednesday.
Yeah, I think we started with the weather, traded some other fundamentals. President Biden came in and talked about the federal gas tax holiday. I think one of the things that maybe was a little bit of a surprise to the trade and to the news media in general, Jesse, was that he also called on states to do the same thing. So that would drive another, 10 to 15 cents a gallon, I would suspect, out of the price if they would participate in that. And I think all those things combined, and then the European model coming out as we closed out the day, showing a bit more rain in Iowa and eastern Nebraska, probably two locations that the trade is really watching closely. If they're not, I am. Those kind of things were really what drove this market. One last thing that I will say about today's trade is the major theme I saw, regardless of what was coming in, was the continued weakness in the soybean complex. I think you had two big things hitting the soybeans today. One was the currency market. The Brazilian currency kind of made a decided turn to a weakening posture against the US dollar. I think the currency market participants who were long beans because of a strong Brazilian real probably jumped out of that market. The second thing was the vegetable oil markets. That was probably the 80% of the price action. Was we had a weaker crude oil market as we heard President Biden talk, and that ended up keeping that canola market down very, very hard, 4 to 5% losses in that. Interesting to note, I did some figuring for your show. Canadian canola futures at the ICE exchange from October of last year to May of this year, as of the close at the end of May, had gotten up about 286 points. By the time we got to today's price action, we've lost about 260 points just in this month alone. So we've essentially erased about 90% of the rally that started essentially back at the 1st of November last year. Real definitive classic case of a supply-driven market where you take it up sharply over several months, but then you take it away even faster. And I think that's something that the wheat market is starting to look at as well.
Well, we'll talk more veg oils here in a second. I want to start and pivot just to the weather discussion real quick. I'll pull up one of the maps you sent me on our video today, looking at the precipitation outlook here. And, we kind of started this week with that weather, theme in the market yesterday and saw some big losses. And that kind of continued into the start of today here, Mike, as you alluded to. Looking at this weather map, though, some cooler temperatures, maybe some more precipitation coming in. A lot of things to consider here as we are pretty much in the middle of a weather market now.
Yeah, the map you're looking at right now is the 14-day precipitation versus normal. And so as you get to the dark reds and browns, you're talking about literally zero versus normal. And I was surprised in the last 14 days how much this map has changed and how much worse it's gotten in terms of much needed necessary rainfall. And the reason I went to look at this map was because of the crop tour I took earlier this weekend, Jesse, with the long holiday. I went from Kansas City directly east into St. Louis, directly east all the way over to Jasper, Indiana, along 64 after taking 70 out of Kansas and in through Missouri. And what I noticed was a short crop, a very short crop. In fact, one of the shortest crops I've seen in many, many years. And I had a couple clients call me, one from Northern Illinois near Princeton, Illinois today, and tell me that after seeing that crop tour and those images, he said, my corn is about that height and is rolling on the daytime temperatures. So I think we have an extremely vulnerable crop at this point because it's so short. And with this dryness in this map showing up, I think the crop conditions are being a bit misleading at this point, especially if we miss a couple rains. I think crop conditions could drop pretty dramatically given the vulnerable size of this crop. And producers are telling me the same thing in some of these areas.
Well, and we think about all of this and kind of just keep an eye on the weather here, but obviously some of these other factors weighing into the market here this week. And, I think looking at this corn market today, I thought that was very interesting. Some of that spread action between that July contract and into the deferred months. And we kind of liquidated there at the end, although the close today, July quarter up 7 1/4, 768, but then September, December, March, all down about 7 cents. So, talk to me about what you saw with some of that spread action in corn here today, Mike.
Yeah, it's a little bit harder chart to see, but I'll have this on my web update with your video as well for clients and subscribers, and I'll make it public access on my website, globalcomresearch.com. Might be able to see it a bit better because it is a big chart. It goes all the way back to 2010, 2011. And what you see are these spikes. This is going to be your lead month corn minus your next month's corn. So in the case of this chart, it's going to be July minus September. And we made a new multi-month high in July corn versus September. We're getting up there close to 60 cents premium now in the July over the September. And what I like about this chart, and it kind of answers your question for you, Jesse, is when you look at the big spikes ever going all the way back to like 2010, 2011, those big spikes are happening right around June and July, right around the time period we switch off from the July. It goes into delivery on the futures, and then the September takes over. So expect fireworks again this week. And to answer your question more directly, if we're heading higher in the July and the bull spread is working very sharply to the upside like it has been, and I look at the cash basis levels where I have, for example, Decatur, Illinois, 62 cents over spot on the processor there, Cedar Rapids, 45 over, some of the ethanol places like Union City, Indiana, 65 over, and then Council Bluffs, Iowa, 50 over. Rivers are running 30 over plus as well. Says to me that this spread is reflecting the cash market and the tight cash bushels. And so that's what I want to see. If the delivery process, this grain stocks report and the acreage report and the tight old crop supplies could really help the new crop out at this stage of the game and really reflect better how tight these cash supplies are. It also could mean that we're going to see some demand come down the way here as far as export demand specifically.
Well, and one has to wonder here as we work to, move to that September contract in corn. And I talked with some farmers here last week in the heartland, and some folks still maybe hanging on to some old crop gambling bushels here, wondering what will happen, but also thinking about new crop and whether or not they should market with all the weather issues as well. How much should they look at selling? I mean, it begs the question, what should a producer do if A, they're holding a little bit of old crop corn, and B, if they're looking at their crop that's in the ground, wondering what that yield's going to be, how much should they market, for new crop right now?
Yeah, I think in the old crop with the corn, especially with that chart we just showed, if you're 60 cents over in the July versus the September, and they're still bidding off the July and they're giving you a 65 over bid at a processor like Decatur, Illinois, I think that you take the money and run for the old crop and just replace with some new crop options because I think what I'm seeing in this market right now, and maybe this answers the question for the new crop somewhat too, is that we rallied on the outside markets and the energies. That's why I brought up the canola and how much we've fallen from the highs. We rallied on the vegetable oil markets. We rallied on inflation. We rallied on energy. We rallied on the Federal Reserve not wanting to tinker with interest rates. Now all that's changing before our eyes. And I think, Jesse, what we're doing is we're swapping out fundamental factors as to why we need to keep prices high. And what I'm getting at with clients and subscribers and talking to you about today with the weather is it really is getting more down to the weather at this stage of the game, unless USDA gives us some surprise numbers. And otherwise, it's up to the wheat market, and it's up to Ukraine, and it's up to lost supplies because of that war over there, actually worsening conditions as far as being able to get supplies to the world market. I personally think the market's just kind of forgotten about that in the short term here because there's so many other pressing fundamentals they need to price in. But I think the justification for high prices is no longer so much energies as it is weather market.
Mike, let's switch gears and talk about the soy complex here today. And that was where we saw a lot of pressure initially. You mentioned this a few times now with the canola market, the veg oils, et cetera. A lot of liquidation there today. Crude oil's been liquidating the last couple of days. I'm going to pull up another chart on the video. This is the soybean continuation chart, the monthly chart. You look at the soy complex here at a rough day today. We had a bit of a rough day yesterday. What do you make of what's going on in the soy complex right now?
If I didn't care about fundamentals at all, and I didn't care about the short crop and the soybeans, this chart, in my opinion, between taking out the green line of support, this uptrending support line drawn off the late 2021 lows. So it's the backbone of this rally. If you take that out on a closing basis this month and you fall back below the 2021 highs of around 1670 area, which we have done now, we're eating into both of these key support levels, and you're starting to turn those squiggly lines at the bottom, your oscillators, turning them towards more of a quote sell signal, unquote, then I think that's where you have to look at buying puts at this stage of the game if you're in the risk management business and if you're looking at trying to protect profit and revenue per acre, Jesse. I'm really willing to give this market a few more days, if not maybe a week, because of the weather and because of what we talked about earlier about how behind this crop is. And I mean, I literally saw beans just coming out of the ground for the first time in eastern Illinois and western Indiana because it had been so wet over there. And now those soybeans are really under some serious stress as temperatures are starting to climb. And so I think we have the potential to hold that support level that we're looking at on this chart. But if we don't, I don't know why a bought put wouldn't be the answer, because it's a great floor price, in my opinion. You don't have to sell cash bushels. You don't know if you have or not because of the production side of the equation. But this is what historical markets do. You know, you have to get something underneath you, in my opinion, as far as floor prices. So that kind of helps answer your new crop question on soybeans. As far as new crop wheat, my mindset is you're in the throes of harvest. I don't think harvest is going to be as good in soft red wheat country. I think that's starting to show up by a tour that took place in southern Illinois, and those numbers came through below the 5-year average or right below the 5-year average. And I'm hearing more clients in good areas like northern Indiana tell me they've got out in their wheat fields this week and it's turned hard and it's ready to harvest, and they feel like they've lost some test weight, if not some yield. So I still think the wheat is a player here, even though we've got this harvest pressure.
Well, do you think as well today, the wheat market, we kind of liquidated. We were up nicely throughout much of the day, and then we kind of backed off at the close. Got some more reports. You mentioned earlier about what's going on between Russia and Ukraine. Some more reports of Russia firing missiles, hitting some more grain terminals here today. Pulling up another map here of the Black Sea and vessels, and right now on the Black Sea, and just wondering about all this. All these issues still ongoing in the Black Sea. And like you said, the market may be forgetting about things a little bit. Do you think this was a considerable weight on wheat here as well here today?
I do. I think the fact that we've got harvest pressure and the Kansas yield started to come up in the areas that got rains and didn't get as much freeze damage. The trade, I think, has put on the side burner what's happening in Ukraine. And what I'm trying to bring back to the front burner issue here, Jesse, is Turkey and Russia are now part of a major deal being worked out to try and provide a corridor again in the Black Sea. But this is a real-time analysis, satellite data. You can see the ship name. I took an example of one of those green arrows. It shows it's a ship. It's a Russian ship. It's got wheat on it. And you can see the direction they're heading. And almost all of these ships are either heading into the southeastern Black Sea, and they're heading into North Africa, or most of them are heading towards Istanbul, Turkey. And this is where, between, like you say, Viterra's operations in Mariupol, or excuse me, in Mykolaiv has been hit with rocket fire. Bunge's Mariupol facility, I believe it was. It might have been the Melitopol one because I circled both. It has been down since February 28th. It continues to be down. They don't know when it's going to come back up. And the one in red, Odessa, that's the crown jewel of the Black Sea shipping for Ukraine and especially for the grains. And my personal belief is, as a historian, that's what Putin is going after at this stage. But in the meantime, he's using a mindset. Well, let's just talk about this grain corridor. Let's put Turkey in charge of it. Well, what it looks like to me on this real-time satellite imagery is these vessels are going down to Turkey already, and they are probably, I say, and I stress probably, carrying Ukrainian grain already. And so it's like the fox guarding the hen house type of situation for me. And I really wonder if the trade's really, probed down and dug down and really understood that this is going on right now.
Well, Mike, I want to give us time to talk livestock here today as well. Cattle and hog markets, both kind of a rough day today. We ended up with some triple-digit losses. Just felt kind of doggish there today. Starting with cattle, what are your thoughts? I know we have an on-feed report coming up here as well.
Yeah, glad you brought that up. I think the on-feed numbers are starting to play into the trade. I think they're starting to play mostly into the feeder cattle trade at this stage, Jesse, and that's going to be your placements numbers. The average guess is right under 100%. I think that's a very manageable number. On-feed number for June 1 is right around 101.4. That's a very manageable number. Then this is the Reuters average poll. The marketing's number is what would impress me. The average number for marketing is 103. If we could get that or better, that would be really impressive. And I think there's a shot we can. And I say that because I think cattle in particular, fat cattle, have been under a weather market, kind of like corn last week, and they're letting the air out of the balloon because the weather market and the temperatures specifically are crashing at this point. So I wouldn't look for the fat cattle market to do much unless something came out of nowhere and really supported cash. Otherwise, I think cash could actually help lead the futures into more of a corrective mindset as we get ready for this report on Friday.
Mike, how about the hog market? Felt like it was a little bit better there today with just the front months down, kind of the opposite of yesterday. The front months were trading a bit higher. What did you see there?
Yeah, great point. I think unwinding of spreads was the hallmark of today's trade, and that makes sense. We've got the big quarterly report coming out. I'm starting to look at the quarterly numbers. I'm looking at that price. I'm looking at the poultry price around the world, not just here, but in China. And I'm looking at what we're faring, what the pig numbers prices are for SEW pigs. I think, Jesse, the breeding number could pop again. That's what I'm going to be looking at. Fairwings and kept for breeding. I'll be watching those very closely because I think the incentive is there monetarily, except maybe the feed prices, but maybe those livestock guys will be betting on the come that feed prices will be coming down. So that's what I'd be looking forward to. I'd say we're probably towards the top end in the nearby futures at this point.
We haven't even touched the financial markets yet, Mike. Just a
Let's
couple
not
moments
say
on
we did.
what's that?
Let's not say we did.
I was just gonna say, I know Senate, excuse me, Fed Chair Jerome Powell spoke to the Senate Banking Committee today, made some comments there. That may be something that could play into the market. I know there's been a lot of news though coming out lately surrounding the financial markets and inflation. I know that's just another factor that's playing into the ag trade right now.
Yeah, very simply, Jerome Powell's Senate testimony, which I listened to today, it just keeps the dollar in the top three as far as pole position for market moving. And that dollar also moves energy markets. And he talked about that. And he talked about how the dollar and his policy work together and how the energy prices bounce off of that. He can't do anything about what's going on in Ukraine, but he can indirectly, is what I'm getting at. And I think he's really on a mission to get after inflation, even if it means touching the recessionary button. He doesn't want that, but he's also saying a softish landing. Well, I don't know what that means, because softish to me means it could be pretty hard too. And I think that's what the commodity investors are really looking at right now.
Mike, fantastic stuff as always. Any final thoughts for us here, real quick, before we run out of time?
Got the free trial back on the website. Pick it up and see what you think. Got a lot of good stuff out there. I know it's a lot of thick stuff, but I think it really improves your revenue per acre, or at least I hope it does.
Globalcomresearch.com. That's com with two M's. Globalcomresearch.com is where you can find him with that. Mike Zuzolo with Global Commodity Analytics. Always a pleasure, sir. Thanks for joining us on this Wednesday, and we'll talk to you again next week.
Thanks for having me, Jesse, and great to be with you.
And that's going to do it for Market Talk here on this Wednesday, June 22nd. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.